Good morning, Andy Lockwood from Lockwood College Consulting for another edition of College Coffee Talk. So, I have a pile of questions that I've been drawing from for each of these episodes. So I hope you're joining me this morning to see if any of your questions get answered, or if you have a college planning question, whether it's about financial aid or scholarships, or getting into college, or what the heck you get out of college, anything goes. Please feel free to stick it in the comment section on this post, and usually I get a notification from Facebook that someone commented, and I can answer the question or respond to the comment. So, excuse me. Good morning. I am answering a question today about business owners, and this question originally was asked in February of 2016, so a little over a year ago, and the question came from Deborah Hill, who is now actually coincidentally a client of ours. So hopefully I'm going to give her the same advice that I would have given before. We asked, what's your burning question about college financial aid and scholarships? Deborah's question was, if you are self-employed and your business is incorporated as an S-Corp, do you have to put the business income on the FAFSA form? So, just check this off so I know I did this one. So the answer is a little more expansive than the question. So here's what I mean by that. First of all, the FAFSA, free application for federal student aid, is the main financial aid form that is taken by every college in the country for all intents and purposes, about 4,000 colleges. And that has very specific rules about what is included in terms of business owner stuff or self-employed stuff meaning income and savings and a bunch of other items. But there is another form that many people, including Deborah's families, need to fill out in addition to the FAFSA, called the CSS profile, which is taken by far fewer colleges, not 4,000. It's roughly 270, 260-ish colleges that have this additional requirement, not in lieu of the FAFSA, but in addition to the FAFSA. And the main difference between the two forms is that the FAFSA is about 108 questions, give or take, and the CSS profile is more than double that amount, much more detailed, much more complicated and convoluted. And the reason I'm bringing up that second form to answer Deborah's question is because if you're a business owner or you're self-employed, there's more disclosures required on the CSS profile. So let me go back to the original question, what goes on the FAFSA? So on the FAFSA, it asks about your adjusted gross income, whether or not you're a business owner, and a bunch of other stuff that has to do with you. Your adjusted gross income number, just in terms of how it works when you file a tax return, that will include whatever income you've derived from your business. So that's the income. It's the only income number that the FAFSA is really concerned with. It's not a separate business income number. It's the individual adjusted gross income that includes indirectly. It includes your business income. But a few more nuances here that I want to point out to you. So first of all, there is a box that asks you to indicate whether or not you are a business owner, and then it asks you to indicate what the value of your business is. And here's a big mistake that even many CPAs don't really understand, because it's in the fine print. But for most business owners, the value of their business is zero. And the reason I say that, and I'm paraphrasing, but the rules say, or the directions say, that if you are self-employed, meaning you own more than 50% of the business, then if you have fewer than 100 employees, then you can say you can skip the question pretty much. The value of your business is zero. So if you have less than 100 people and you own the business, that's zero. So there's a potential loophole. Also, if you have some money stashed in the business, or you think it's worth more, that's fine. Think whatever you want to think privately, but be optimistic privately. But on the FAFSA, you want to be very poor. You want to be very pessimistic. So that's really important. Now, there could be some other questions too, relating that the financial aid office could ask you about your business, including your profit and loss statement and your balance sheet and all that. But that would not come into play unless you were also applying to a college that takes the CSS profile, because that again is the more complicated, convoluted financial aid form that's about twice as long as the FAFSA, and will ask you your percentage ownership, your percentage of income, your percentage of expenses, and a bunch of other stuff. I don't want to get into it right here because I'm not sure I'm absolutely correct on all the stuff, because I don't fill the forms out in our practice. Pearl does, my wife. But that is the fuller answer, which is that getting back to the income, you always include your personal income on the FAFSA, which if you're a self-employed or you're a business owner, those are treated the same thing. Those will automatically be included in that individual adjusted gross income number. Now, a lot of business owners have the opportunity, or I'm a business owner, so one of the few remaining loopholes that we still have at this point is the ability to write down a lot of expenses that that legitimately that we're using for business. So many times business owners have artificially, or maybe not artificially, but lower income on paper, which helps them pay less in taxes. But that doesn't matter for the financial aid forms. You still go for your individual information, your individual adjusted gross income. My final comment is, I'm sort of plussing what I've already said. Many business owners can't qualify for need-based aid because their income is too high for the colleges that their kids are applying to. There's no magic cutoff number, but in those cases, and I probably have 2 or 3 of these a month, during some months. In those cases, there may be a set of tax-related strategies to shift income away from the business owner and into a lower tax bracket that can free up some money. You don't have to make more money. You can just free up some more money in terms of lowering your tax burden on the income that you shifted away. So in financial aid in general, you want to keep the money out of the kids' names because money in kids' names penalizes you more than others. But if you're not going to qualify for need-based aid and you're a business owner, it may make sense to shift money into the kids' names. So that is definitely above and beyond the pale of this discussion. I try to keep these to 5 minutes. If you liked this, please share it. Please click the little like thingy doodad. If you're feeling particularly strong, click the love thing. And like I said before, please feel free to pop in your comments. I've had quite a few come up in the last couple of weeks, so I'm happy to try to answer them. And if you have any questions at all about your own personal situation or you want some more information, go to our website, which is collegeplanningGuru.com, and there's a bunch of ways to contact us, including scheduling a free college strategy session with us or getting some more information. You can download a copy of my book, one of my books, How to Pay Wholesale for College. You can download that for free. You can sign up for an upcoming webinar. We got one planned for this Saturday because it's going to rain, so I figured, hey, we'll do one on college financial aid and scholarships and admissions. So check out collegeplanningGuru.com for more information. I'm signing off from this episode of College Coffee Talk. Thanks for watching, and speak to you tomorrow.